Hello, and welcome to this week's Motor Trade Radio podcast, powered by Motors and Cazoo, with Philip Nothard and Curtis Hutchinson, bringing you all the chatter that matters from across the franchised and independent dealer sectors.
Well, Happy New Year, everyone. It's good to be back on the Motor Trade Radio podcast. Happy New Year to you, Phil. Hope you had a good break.
And same to you and same to everybody. It seems a while since we were on.
Yes.
But the sector certainly hasn't slowed down over Christmas. I think there was probably stuff coming out on Christmas Day. I'm not quite sure, but it certainly didn't. It didn't slow down, did it?
No, not at all. And putting the headlines together for today's pod, there was no shortage of stories because, as you say, it didn't really seem to slow down. Even during that quiet week, what is traditionally the quiet week leading up to Christmas, there were still stories coming out. So we've got plenty to catch up on today.
More of the same. So we're on season 12 now, Curtis.
Yeah. Yes.
Season 12, episode 1. Of season 12, so
12 years.
Yeah.
Can you believe it?
Oh, still going strong, still going. So unfortunately, if you are listening to us, you're going to hear a lot more of us again this year as well. So so there's been a few changes, haven't there, between the last podcast and this one?
Yeah, indeed. We new sponsorship, Motors and Cazoo. So big thanks to the team there at Motors and Cazoo for sponsoring the podcast this year. We've got plenty of new things coming up, starting with the new jingles, and many thanks to Stephen Whitten for recording the new jingles for this year. But we're also working on some exciting weekday episodes and some supplier specials, which you'll be hearing over the coming weeks and months.
Yes, yeah. So you would have seen the probably the new visuals because we did change those just before Christmas when the embargo had lifted and we could change and really announce and promote the Motors and Cazoo new branding. So that's now live, and as Curtis has said, good old Stephen Whitten has spent his Christmas and New Year recording the new jingles as well, so that'll be fresh to this new episode. But thank you for the continued support, and we will continue with that.
You're listening to all the chatter that matters on the Motor Trade Radio podcast, powered by Motors and Cazoo. If you're a supplier and would like us to profile your business and reach our audience of dealer group bosses, managers and decision makers on one of our supplier special episodes, then get in touch with Curtis and Philip at motortraderadio@yahoo.com.
Companies already featured in our supply specials include Prospecting Dynamics, iVendi, ETT, Generational Tracker, Jigcar and MTC, and you can find them all in your podcast feed. And if you would like us to profile your business in this year's new series of supply specials, then just get in touch with Philip or myself on LinkedIn or at motortraderadio@yahoo.com.
You're listening to all the chatter that matters on the Motor Trade Radio podcast, powered by Motors and Cazoo.
So headlines this week come from AM, Motor Trader, Motor Trade News and Car Dealer. And because it's the first show of the year, we'll start with the year-end new car registrations for December and the full year. We'll have a look at also the used car trends over the course of last year from Motors and Cazoo. Looking deeper into some of the new car figures, we'll see how some of the Chinese brands performed in 2025. And we'll also have a look at new van sales. And in other news, we'll be looking at dealers facing ambulance chasing claims from consumers impacted by Stellantis' stop drive notice. And We'll start the year with 2 new acquisitions in the dealer sector.
Yeah, so as Curtis has said there, we're going to head over to AM Online that covered the new car figures and as well as obviously what came out directly from the SMMT there. Now, the headline at AM Online is Volkswagen retains clear leadership of UK new car market. Now, obviously, the headline really has hit that we achieved just over 2 million registrations in 2025. I think it was 2,020,000 in total, which was a 3.5% increase year on year over 2024. But obviously, it's the first time that the UK has achieved that 2 million mark since 2019, which obviously that's a good result, although there's probably a lot of detail to dig into in how we got there, but we still achieved the 2 million however way you look at it.
Yes, definitely. And certainly boosted by activity in December, because the December market was actually up 4%. And looking at some of the breakdowns there, it's interesting to see how certainly battery electric vehicles increased in December, so that they were up 8%. PHEVs were actually up 33%. While diesel and petrol were both down, but not a bad showing for December as a whole. But really the focus is on the full year, isn't it?
Yeah, and I mean that's it now. Where we're looking at, obviously, the big headline again coming out from the SMMT is obviously that the growth, particularly, and you mentioned it on the introduction there, that the Chinese brands, without their contribution and growth, we probably wouldn't have seen this figure, would we?
No, definitely not. And the SMMT said that certainly the EV sector powered a lot of the sales in 2024, and certainly at the end of the year, because saying that the year-end results came with a strong December market, fueled by sales growth from Chinese brands, and it specifically says Jacob, BYD, Omoda, Polestar, and MG, which we'll look at in another story. But overall, a strong market for 2025. And as you say, it's the first time that the 2 million mark has been breached since 2019. And within this story, it actually looks at how over the course of 2025, almost 500,000, so 473,000 units, were new battery electric vehicles. So, showing that sort of critical mass now that we're starting to see from BEVs, even though, over the course of the year, the percentage of BEVs sold was made up at 23.4% market share. So that still falls short of the ZEV mandate target of 28%. And the SMMT warned that the gap between demand and ambition is increasing rather than diminishing. So on the surface, that looks like good news, but we're still quite a way behind on the ZEV mandate.
I think that's the thing, and obviously the sector at the minute are calling out that you're moving this year is quite a significant step for the ZEV mandate from 2025 into 2026, and then it does really, after 2026, it really starts to ramp up in the thresholds as we move out to that 2030 deadline. So, the government and the sector are really deep in conversations and trying to get that ZEV mandate reviewed earlier than 2027, which it's currently scheduled for, which I know we covered on a story just before Christmas there. But just some other figures before we move on a little bit. Diesel represented 103,000 registrations, just short of 104,000 actually, which is a fall of 15.6% year on year, representing a 5.1% share of the market. Petrol fell 8% year on year to 937,000, representing a 46.4% of the market. As Curtis said, BEVs there at 23.4%, PHEVs, the plug-in hybrid, represented 11.1% share with a growth of 34.7% up to 225,000. And HEVs represented 280,000, and that was a growth of 7.2% to take a 13.9% share of the market there. So really indicating that those trends with diesel continuing to show decline, petrol slowing a little bit softer than diesel now, but actually, that PHEV and the BEV market really showing those significant growths year on year.
Yeah, and I did have a close look at the SMMT figures that came out at the beginning of the week, and I've got some top 5 winners and losers, and really sort of focusing in on some of the more mainstream brands. So in terms of the fastest growing brands, number 5 was Peugeot, which was up 20.5%. Number 4, Cupra, up 35.5%. Number 3, Polestar, up 95%. And number 2, Amoda, up 447%. And number 1, BYD, up 485%. And that equates with BYD, that equates to 51,422 units, giving them a 2.5% market share. So a very, very strong showing there for BYD. And in terms of where they sit in the UK market now, they actually outsold over the course of last year the likes of Citroën, Dacia, Fiat, Honda, Mazda, Mini, Seat, and indeed Tesla. And certainly globally, because one of the stories that did break over the Christmas holiday period was that BYD had overtaken Tesla as the leading global producer of EVs with 2.25 million sales compared with Tesla's 1.64 million. And moving on to some of the fastest declining brands over the course of last year. So number 5, Toyota, who were down 11.2%. Mercedes, number 4, down 13%. Number 3, Citroën, down 31.7%. Number 2, Seat, down 37.4%. And the biggest decline over the course of last year was Fiat at number 1, down 38.5% to just 8,764 units. So some interesting trends there amongst the brands in terms of growth and decline. And a lot of this is cyclical. It depends very much on where they are in the product cycle and certainly where they are with EVs.
Definitely. And following on from that, we will go over to Car Dealer. And this is, as Curtis said earlier, they're looking at the Chinese car brands. And this is how did Chinese car brands fare in the UK in 2025. We analysed the sales figures, and there is a video that does support this. But Car Dealer sort of dug into the detail of what has been happening with some of these Chinese manufacturers, and saying that the top 10 best-selling manufacturers in the UK in December of last year, you obviously got there with VW in first position with 11,500 units there, but then MG in second place with 9,800, followed by Ford with 9,600. Then you've got BMW and Audi with just over 8,000, closer to 8,500. But as Curtis said there, BYD in December, 7,600 registrations, followed by Volvo, then Tesla. So, a real mix now as to how these Chinese manufacturers are starting to emerge as in that sort of top 10 of the UK manufacturers now in the marketplace.
Yeah, and that really is an interesting snapshot of December, and it will be interesting to see how that will start to look as we go into the new year. But this piece up, it's definitely worth having a look at because it does identify each of the Chinese brands in turn and shows how they performed over the course of the year. But the key stat from this is that 9.7% of new cars last year were from Chinese car makers, and that equated to almost 200,000 vehicles. So definitely one to watch for this year.
Yeah, and I think that's the thing now. I don't know how many manufacturers we've got. I know when we had the conversation with Robert Forrest, I think at the time it was 74. It's going to be interesting. It might be worth totting that up again in a month or so and seeing where we are then in terms of manufacturers represented here in the UK. But just before we move on to the other stories, just a little bit from the European market. That in December, France, 172,000, just short of 173 actually, fell 5.8% year on year. Germany grew just short of 10% to 246,000 registrations there. Italy, marginal growth at 2.2% to 108,000 registrations. Adverse to that is Spain. They fell 2.2% to 103,000 registrations. And interestingly, the US fell 2.5% to 1.5 million registrations over there in the US. So not a consistent story for everybody on the December results there. Quite a mixed picture of what's been happening out there.
Yeah, definitely. And heading over to Motor Trader for a look at the van registrations over the course of December in 2025. The headline there is "Weak Business Confidence Hits New Van Sales in 2025." So that really does sum up this particular story. So it's showing that the latest SMMT figures show that the LCV market declined by 10.3% in 2025, with 315,422 vans registered over the course of the year. And within the piece, it says that the SMMT reflected that fleet renewal shrank in every month last year other than December, which posted a slight 1.7% rise. And I do have the figures for December as well. So the December market overall was actually up by 2.6% to 28,030 units. But I guess the big story from the van sales stats is the position of battery electric vehicles, because year to date, the units registered were just over 30,000, which was actually up 36.2% year on year to take a 9.5% market share, but that's still some way behind the mandated figure of 16% for last year.
Exactly. I mean, we think there's a challenge for the car market, but the van market again is still a significant struggle for that EV. And I think the bigger thing at the minute is the Z mandate, forcing the wrong activities in the sector. And there's certainly you don't want cars sat around unsold but registered. You certainly don't want vans sat around registered but unsold either, do you? So it's a bit of a challenging one there. But we're going to head over to Motor Trade News now, and this is Volkswagen Golf overtakes Fiesta as the most searched used car in 2025. And that was the VW Golf was the most searched used car in 2025, ending the Ford Fiesta's long run at the top as online demand remained stable throughout the year. Now, I know this is something that you are involved with working on this insight and this data through the latest market view analysis from Motors and Cazoo.
Yeah, so this is very much their analysis of the full year, and the stats. Looking at the stats were fascinating, and what a good start to the year for Volkswagen. So they were top selling brand of last year, and the Golf was the most searched used car over the course of last year. And the data shows that the Golf accounted for almost 3% of all online used car searches over the course of the year, followed by the Fiesta, Focus, BMW 3 Series, and Vauxhall Corsa. And looking specifically at the electric vehicle segment, the Tesla Model 3 remained the most viewed EV, representing more than 8% of all online EV searches over the course of last year, with the Nissan Leaf in second place, followed by the Jaguar I-Pace, and the Tesla Model Y and Renault Zoe completing that top five. And also, over the course of the year, Ford continued to lead as the most searched used car brand overall, accounting for 11% of all searches. And they were followed by Volkswagen, BMW, Audi, Mercedes-Benz, and Vauxhall.
Yeah, there's a quote in here from Lucy Tugby, who's the marketing director there at Motors and Cazoo, said that 2025 proved to be another year of stability for the used car market, with demand holding up despite the ongoing economic challenges faced by many buyers, and saying that their market view data for the year shows consistent levels of positive online engagement, with an encouraging increase in searches from Boxing Day and into the first week of January. And as always, there's a lot of data in this, and there is a little bit more data looking at some of that fuel comparison and pricing comparisons as well.
Yeah, definitely. So do head over to Motor Trade News to check out the full story, because, as you say, there's a lot of data, a lot of trends around what happened over the course of last year in terms of petrol demand, days to sell. But we'll be back with the rest of the week's headlines after the break.
You're listening to all the chatter that matters on Motor Trade Radio, powered by Motors and Cazoo. This is your weekly one-stop shop for all the biggest car retailing headlines from across the media.
Next headline is from Car Dealer, and it's dealers facing ambulance chasing claims from consumers impacted by Stellantis stop drive.
So we cover this in the UK, don't we?
Yeah, we yes, I do feel as though we've been here before. There's sort of echoes of Dieselgate here, isn't there? And finance mis-selling. So this particular story is very much focused on Stellantis, and the report from Car Dealer says that dealers are facing legal threats from ambulance chasing consumers who are still trying to benefit from the stop drive notice issued by Stellantis last year. Now, we reported on this at the time, and the stop notice initially was limited to the Citroen C3 and DS3 models before being expanded to cover C4, DS4, and DS5 cars, but only over certain time periods. And this did place a major strain on the Citroen dealer network, as these vehicles were being recalled to have remedial work done to them. But there was a stop notice placed on them, and this particular story follows up on a release that was put out by Logistics, who have noticed that there's been an increase in owners claiming for under this.
I mean, the bit in this one was quite interesting, because there's a comment in this story saying, to be clear, these are customers who have had absolutely no issues with their vehicles. Some are trying to claim against vehicles they purchased 5 years ago and have been happily and safely driving ever since. And saying that whilst at Logistics they have not received any follow-ups to the letters that they've written on behalf of clients in defence of these claims, that they are hearing multiple reports of dealers being sent follow-up threats of court action. So, I mean, this is it, isn't it, really? I think there's a lot probably playing out on this one, and clearly Logistics are identifying that, where there's a blame, there's a claim, and not even customers that have actually had a problem with the car or even had a stop on their vehicle, that they are actually trying to get a claim from the dealers.
Yeah, definitely. And it's a significant issue for Stellantis, because it covers 130,000 vehicles, which were effectively forced off the road from last summer. And the recall is very much around 40 airbags. So, it is a serious issue. And I know the Citroën and indeed Peugeot networks have been working hard to rectify the problems and get these cars back on the road. But I think this one's going to rumble on, isn't it?
Yeah, and they sort of finish off in the story to say that it's not to say that there may not be arguments in some cases which may explain why some dealers are being pursued, but dealers should still take proper legal advice on receipt of a potential claim to avoid exposure to outrageous credit hire costs, and saying that if any dealers do receive one of these letters, then reach out to the legal team via logistics, and they'll happily guide them accordingly. So it seems it's the last thing that they need at the minute and start of a new year, isn't it? I think the dealers are sort of wanting to come out into the market, fresh year, fresh start out of the blocks, and you've got all this now to deal with within that Stellantis network. It's not what they need, is it?
Definitely not. Now, the last two stories for this week are both around acquisitions, starting with Motor Trade News reporting that Thurlow Nunn acquires all Spirit Motor Group's dealerships. So, Thurlow Nunn, Kings Lynn-based group operating across Cambridgeshire, Buckinghamshire, Suffolk, Norfolk and Bedfordshire, representing Vauxhall, Peugeot, Honda, Hyundai, MG and Leap Motor, have acquired all Spirit Motor Group dealerships, which will see it expanding its presence in Northampton and Corby, with an MG site in Corby, as well as Hyundai sites in Corby and Northampton. So a good move here for Thurlow Nunn, and an interesting group to watch because they have been growing over recent years.
Yeah, it's a great family business. I speak to Simon Grills there, who's the sales director, I think. Apologies, Simon, if you're listening, and that is not your proper title, but a fantastic business, an excellent leadership team, and as you say, kind of quietly there under the radar, getting on with a good job representing their brands and partnerships, and like you say, just quietly expanding. And this must be a fantastic acquisition from them there, and obviously there with Will Chu, who's the managing director there at Thurlow Nunn, saying that they're proud to welcome Spirit customers and colleagues into the Thurlow Nunn family. So like you say, sort of the first, one of the first sort of early announcements of an acquisition in 2026. I think there's probably a few more to come as we move through.
Yeah, well, we've got another one here. So heading over to AM Online, and the headline is Grainger's return to Honda, Nissan, Mazda with 3 Norton Way dealership deal. So this is Grainger Motor Group, who listeners will probably be aware of. Grainger Motor Group, even though they only formed in 2022. The group was launched by Harry and Neil Grainger, who will be better known for their many years at Norton Way Motors under their father, David Grainger. And the two brothers collectively had spent 40 years in the business. Now, they launched Grainger's Motor Group in 2023, funnily enough in January, with the acquisition of Mantles Group, based in Hertfordshire. And then in January 2024, they acquired EMG in Anglia. And here we are in January 2026, and they've made another acquisition.
Must be a theme, that. I think there's
I think so.
Yeah. I think, but no, I say, I mean, fantastic acquisition there, and as you say, used to the within that Norton Way, which subsequently was acquired by Marubeni, and obviously now taking back some of the the businesses that they once had there. So yeah, a great growth. And I think we spoke about this Grainger Motor Group last year, didn't we? And I think at the time we did say that we're going to expect a lot more from these guys as they sort of develop that new group now with those acquisitions. And maybe we'll have to wait until next January to talk about it again, but we'll see what occurs.
Yeah, no, definitely. Again, another dealer group to watch because they are growing at some speed now.
Yeah, definitely. So hopefully we've kept it quite tight for our first one back as Curtis and I get back into the swing of things. Hopefully you enjoy the new jingles with the Cazoo and Motors and Cazoo branding there. And I say we'll try and continue to try and keep ahead of the big headlines as we go through. But we're not expecting 2026 to be much different than what we went through in 2025.
But that's all for now. So many thanks for joining us on the Motor Trade Radio podcast. Until next week, it's goodbye from me.
And it's goodbye from him.
Thank you for listening to the Motor Trade Radio podcast, powered by Motors and Cazoo. We'll be sharing all the URLs from this week's headlines in our newsletter on Monday morning. To subscribe, just search LinkedIn for the Motor Trade Radio podcast.